All right, good afternoon, everybody. Good evening. We'll wait a few minutes to get started. Let the room fill up. Anybody have any quick comments about anything before we start?
Can hear you loud and clear.
All right, marvelous. When I came on, I heard somebody say something, so I knew it already worked. But I always ask to make sure, there are times where there is an issue and you could be talking and no one's listening or hears you. I had that issue the other day. It was really weird. They can hear me. I couldn't hear them. That was technology. You buy computers, but all the pieces, the microphones, the headsets, all the pieces that you use that go into a computer are all made by different companies. So there's always something that goes kind of wrong or haywire.
The integration problem.
The what?
Integration problem. Integration.
Yeah, I mean,
Integrating
it
from.
used to be worse years ago. I remember years ago there were certain printers you couldn't use with certain computers, and it had to be, But I'm just talking basic stuff like microphones and headsets and keyboards.
Yeah, yeah.
I've got a really good Blue Yeti microphone, and once in a blue moon, I turn my computer on, and it doesn't recognize it. So I have to unplug it and plug it back in, and it's fine. Why does it do that? I don't know.
And it's a saying, right?
That that's at the
If
level of your
nothing.
operating system.
Yeah.
What's that? What's that, Roger?
That's at the level of your operating system. You probably got an update or something, and it didn't update that particular driver.
That does make sense. That certainly makes
Yeah.
sense.
I've
So
been in computers for 45 years.
Oh, okay.
I can sneak some really bad ones. Do you guys remember the serial port?
Yeah.
Who remembers the serial port?
Roger, I had an Apple IIe computer, so, you know.
Ah, you do
I'm
remember.
56 years old. My first computer was an Apple IIe. I
Do you
thought it was the
remember?
coolest. I thought it was the coolest thing in the world. I still remember it cost like $3,200. And this was back in what, late 70s, 1980 maybe?
Yeah.
Something like that. Yeah.
Well, I was a Microsoft 1.0 beta tester.
Ah.
In 19, what was year again? 82, 83.
It was, Gilberto. Think about it. $3,200 for a computer back in 1980. Considering considering I bought a really good gaming computer a couple of years ago, without the accessories, the monitors, the keyboard, and all the accessories, I think it was 1,200, $1,300. With the computer screens, and they're a buck 50, buck 75 each, and my microphone was $70, and the mic and the so it does add up after a while. But yeah, back then that was a lot of money.
Yeah. I refused to use an Apple computer until they went Unix.
Wow, you're talking years ago. I don't even,
Yeah.
it was just kind of the
Well,
most, yeah.
they went to Unix in 1990s after I think
That's
Jobs
that's
came
way
back.
after, yeah, that's way after I had mine. But you know what? It's funny. I have no idea what we connected to. Obviously, it wasn't the internet, but through your phone system, you were able to dial into something
A
that would
bulletin
kind
board
of act like
service.
a Google. It
It
would
was a
be able to,
bulletin board service.
I don't know
A
what it was. I forgot what it was. It was so
BBS.
long ago.
Yeah,
It
it
was
was a
so long
bulletin
ago.
board
And I just
service.
remember, and one more thing is just funny. If anybody my age probably remembers a company called Amway. It was kind of
Yeah.
like yeah, it was kind of like a Ponzi scheme. It was kind of like the start of the multi-marketing organizations that they have now. Yeah, Amway. So I remember,
Detergent Ponzi scheme.
yeah, yeah, yeah. So I remember from my dad was doing it, and I would input the orders into the computer using this dial-up service and sending out the orders. I mean, you're talking 40, 45 years ago. I mean, it's just crazy how time flies. Yeah, Amway. Yeah, yeah, you had that. Yeah, I remember my dad and his friend used to hold meetings with the whiteboard and everything, like a Tupperware party. And it just, now that I look back in it, what a scam, you know.
Did it
But
for
it,
two
but it,
years.
yeah, but it's like what multi-level marketing is right now. Like
Yeah.
what do they call them? MLMs, multi-level marketing companies. It technically was a multi-level marketing company, except there's no internet. There's no. How'd everybody make out today?
Okay.
Yeah,
A little
good.
something this morning.
Yeah, the price action delivery was not great today. Not at all. Um, we had clear draw on liquidity this trend line, so I knew
Mm,
that was getting broken. Um, it would have been nice to have a better entry into that level, and with PPI and CPI coming out, we're kind of just building liquidity everywhere. We are still in. Um, oh, wait a minute. I don't have what happened to my initial balance? Did I erase it? Oh, that's why. And this is what we're going to go over today. We're still in. This is Friday's action. We're still in the opening hour range of Friday. This is the opening hour range of Friday, right here. High and low. Yesterday and today, we're still in between the first hour range of Friday. So you wonder why things are tough. So, all righty. I'm sure we have some new faces in here, so I just want to go over a couple of things. Gilberto, you always ask me about relative equal lows, man. We've gone over this. If it made a lower high, a lower low, I mean a higher low, then it's relative equal lows. And I think I know what you're talking about. And yeah, they're about a point differential. So yeah, they're relative equal lows for sure. Okay, so for anybody new here, okay, I want to make sure that you're pointed in the right direction and you don't get confused. Okay, so first of all, on Tuesdays and Thursdays today, these are concept and theory lessons. Okay, I'll either go over a specific topic, and that's what we've been kind of doing the past 5 or 6 times, going over specific topics. That way we can load them into the methodology section. So after we complete that, which today will probably be the last day of that, the sessions following are going to concentrate more on implementing live trade actions and sample trade ideas and just kind of back testing and go through that a little bit more. This way you have all the methodology ideas and concept and theory in the methodology section. External to internal liquidity, SMTs, um, uh, entry models, uh, bias, draws on liquidity. Everything is in the methodology section. So the first thing that you should do when you come here, obviously go to start here. This is going to give you a little bit of an orientation. I'm actually redoing this because we've added some stuff lately. So I'm going to redo this probably over the weekend, but it's still valid right now. Okay. But here's the big session, methodology. You want to go in here and watch these. Some of them are short videos. Some of them are links to webinars and sessions that we did. So they'll be a little longer. Okay. But these are an absolute must, from general methodology, how we use volume profile in our work, key concepts we need to understand, going over SMT, talking about fair value gaps, what indicators and tools that you can add to your TradingView or NinjaTrader. Okay. And we're going to add one of them today. Last week, we went over the intraday trading model. We went over day trading equity indices, how to find the bias. Where is price going? Because before you can go into an entry model, we need to know where price is going. Otherwise, the entry model is meaningless. Then you're just a pattern trader. And then one of the most important episodes, 7 points of interest, draws on liquidity. Very, very important. Okay. So go to the methodology, start diving into these, go over them as much as possible. Make sure that you understand the concept and theory of all of these. Okay. Hater, don't worry about the chart right now. We'll worry about that a little bit later. Okay. Now, the most important thing new people can do, go to your settings, type on your profile picture, hit notifications. Make sure you are getting an email notification for all the important things. What's important? Market preview review, AP chart analysis, announcements. Okay, those are really the most important three because you want to get a email on an announcements. You want to get an email on the chart analysis because that's where I post stuff. And you want to get an email when market preview reviews are available. Okay, you also want to get an email on the live room schedule so that way you get a a reminder email. So make sure that you have all of these or what you want checked. You don't have to check all of them. Okay, obviously I don't have any of these checked because I'm on the system all the time, and you know, for me to see every like or comment or post by email, it gets a little it gets a little too much. So just click on what you need, but the most important thing is the room schedule, market preview review, the chart analysis, and the announcements. Very, very important. Okay, so make sure those are clicked on, and on the left here is everything that you need. Can you show me where you load save layout in TradingView? I tried to what load I don't have save layouts in TradingView. I don't have those loaded on TradingView. I'll show you what I use when we pop up the charts, but I don't have any of my save layouts. I use a pretty simple configuration because I'm not using order flow or any of the software, so it's pretty simple. Okay, I'll show that in a second when I drop this off. Okay, so methodology, very important. Announcements. This is where I'm going to announce anything. If I announce something here, it's an important. Most of the time, it's announcing Q&A sessions when they're starting, when they're occurring, or maybe a reminder. Okay, the room schedule. Room schedule, plain and simple. This is the schedule of the room. Okay, the Q&As Monday, Wednesday, and Friday are on a flexible schedule. We have now made 8 o'clock Monday morning a set time for one of them. Wednesday and Friday will be a little bit flexible. Everything we do is recorded. Go to the AP room recording, Q&A sessions, accelerator meetings. You can go through as many as you want. Okay, it's more practice. It's more chances to see something fresh. Okay, which is the difference of taking a course where every time you go back to the course, it's the same example, it's the same video. Here, it's different examples, it's different questions, it's different conversations. Okay, market review preview. This is really important, and even to the people who have been here. Okay, this is where we're going to give you an idea of basically where the key levels are this morning. Okay, and typically I'm going to show you where the key levels are. Okay, do we have a bias? If I don't have a bias, I'm going to tell you I don't have a bias. Like today we had liquidity above and key liquidity below. So it really was just a matter of which one we were going to take first. We had the trend line and we had the levels up top. We took the trend line first. It was a long from there. Okay, in that case, there's no bias. Yesterday, if you remember, right on the opening, I told you I'm bullish. And what happened? We got to move up. We got a pullback, then we got an extended move higher, and everybody made money on a long thing. So this is where we're going to set you up for the day. Key levels, key points, key ideas on the NASDAQ, and we're going to review the London session, the Euro USD, GBP USD, and then we trade the Euro JPY, GBP JPY, and then the Euro AUD, Euro, and the Euro AUD and GBP AUD. Now, why those 6 currencies? Because we feel those are the best and most active currencies to trade. The day trade. Our swing trade list will be much bigger, but the day trade, those are the 6 best currencies to trade, and you should concentrate on that. Why do we trade 6? Each of them are correlated. GBP Euro USD go together, Euro JPY GBP JPY go together, okay, and Euro AUD and GBP AUD go together as well. And we use that for SMT and cracks and correlation. So very important that you're doing market preview review. This stuff is usually out. The currencies are usually out by 7:15 a.m. Eastern time. equity indices by 8, depending on the morning. And then obviously at the end of the day, we review everything, go over the trades, analyze the trades, what happened. This is a great way to learn and compare what you did for the day. That way you can see what the right thing was to do and compare what you did. So now you know what you did wrong and what you did right. It's a big part of the learning process, and we go through that every single day. Okay, AP chart analysis. This is for where I dump stuff out. So if I dump stuff in here, like this morning, I dumped this in here. I said this trend line is very important. We're probably going to draw to that. Okay, what happened? Okay, we had that trend line right here. What happened? Price broke that trend line. Okay, simple things like that. Very important. So if I post something, it's usually pretty important. The student chart analysis, this is your section. This is where you place your charts, your questions for feedback, and I will answer you on a timely basis. Now, if you're asking about a setup, about NQ or a trade that you did in Euro USD or things that we trade, my suggestion is post your idea, but wait till you see the preview or the review, because a lot of times that will answer your question. And if it doesn't answer your question, then post, okay? The AP live chat, this is where you guys can communicate with each other. I'd like to see it a little bit more active. That's up to you guys. It's there if you want to use it. And then the last two, we have NinjaTrader tools and TradingView tools. These are just tools that these are additional tools besides TraderDale's that we use that we feel are applicable to what we do. Okay. And I'm going to introduce you to one of those right now. Okay. So that's it. Any questions about the circle or any of these sections or how they work? Okay, anybody new here? If you have any questions at all, please feel free to message me directly. Okay, you can go to Trader Dale here, go up to members, and you can find me pretty easily. I'm somewhere, there I am. Click on here, and you can instant message me privately. If you want to say something publicly, then you can just put it in the student chart analysis, a question. If you have something that you want to be personal with, send me a private message. Either way, your question will get answered. Okay, so all new people, welcome. So today what we're going to do is we're going to kind of talk about something we've been talking about for a while, but I haven't really implemented it with you guys. I've been kind of slowly doing it. Now I want to kind of introduce it to you so you guys can start kind of taking a look at it. And this is just something I added to my trading probably about 6 to 9 months ago. Okay. And it's just a confluence tool. It's called the initial balance. All right. And the more I use it, the more useful I find it. So I'm going to go over today how I set it up, what it is, how I apply it, and how I think you guys could apply it as well. Some of you may find no use for it. Some of you may absolutely love it. I think it's a pretty valuable tool for numbers of reasons. Now, I'm going to use it a little differently than what it's designed for, but who cares? That's what trading's for. You know, if we're going to use things like everybody else, then we don't have an edge, right? We need to be different. Now, with that said, I still use it very similar to the way it was designed, but I've also found some other features that I really like that I really haven't seen anybody using it. So, you know, we'll kind of go from there and I'll show you what that is. Okay, so what is the initial balance? Okay, the initial balance is the first hour of trading. Okay, first hour of trading. Okay, now, what things do we use initial balance for? Primarily, we're going to use it on the equity indices. Okay, so the equity indices, your first hour of trading is going to be 9:30 a.m. Eastern Time to 10:30 a.m. Eastern Time. That's it. Okay, that's your initial balance on equity indices. Okay, now, this doesn't really work with currencies because currencies aren't an exchange product. They trade 24/7 pretty much. There's no exchange. There's no opening price. There's no market. Okay, the other two, okay, let me just put these equity indices. Oh, I'm a terrible typer. All right, I know I spelled that wrong, but you can see. Oh, I'll fix it. I'm a perfectionist. Indices. All right, so equity indices, initial balance, first hour of trading, 9:30 a.m. to 10:30 a.m. Eastern time. Now, that's primarily what we're going to use it for. There are two, actually, there are a lot of other markets you can use it to, as long as they're an exchange market. The two other, I guess, I wouldn't say popular ones that people trade is gold. Okay. Now, this is why I think people trade gold wrong. People think gold is a London uh, trading product. And it could be a London trading product. But the biggest gold market in the world, the exchange, is the COMEX exchange, which is now all owned by NYMEX, which opens, okay, at 8:20 a.m. Eastern time. If someone has their mic on, please mute it. I hear some background noise. Roger, I think that's you. Thank you. Okay, so gold initial balance, believe it or not, is 8:20 a.m. Eastern time to 9:20 a.m. Eastern time. Why? Because that's when the pits and the COMEX market, now it's the exchange, the electronic trading, open, biggest gold market in the world. The COMEX exchange opens at 8:20. So that's our opening price for gold, 8:20. It's not 9:30. It's not 7 a.m. It's not we don't worry about kill zones. It's 8:20, 8 to 9:20. Okay? Because it's an exchange product. Okay? The other one you can use it for if you do trade it, and I think we may only have one or two people who do trade this, is crude oil. All right. Now, crude oil, is that for silver too? Yeah, that's a good question. I would Google it. Just Google what the initial balance is for silver. I would think so. I would think silver and gold have the same initial balance. Let's see. Hi, so first hour trading, it doesn't help. Initial balance time for silver. No, that's not the initial balance. First 60 minutes of trading. Yeah, it's the same. It looks like it's the same. Don't you use AI for these questions? Man, I am 56 years old. This stuff is kind of, I should, but it says 8:20, so it's, or maybe 8:25. It's pretty similar. But I would, yeah, I would 100% just double check that, Praveen. Okay, so crude oil is actually going to be 9 a.m. Eastern time to 10 a.m. Eastern time. Don't ask me why. That's when the oil starts trading actively. Okay. So those are your three main things that we can use the initial balance. Okay. Now, what is the initial balance? Again, it's the first hour of trading. All right. It is not the ORB, the opening range balance, that a lot of people trade and talk about. The opening range balance theory is typically the first 15 minutes or the first half hour. Okay. And their traders are looking for a breakout of one side or the other. It's a gimmick trade. It's a trade meant to encourage people to trade who don't know how to trade and don't, feel like it's an easy way to trade because it's just one thing they have to do. It doesn't work. But that's what the opening range balance is. This is not the opening range balance. We are not trading any breakouts. We are using the initial balance for information. Okay. So there are two tools that you can use for the initial balance. So on TradingView, all right, this is the Actually, the name's not there. Okay. So here's the name of the indicator, and I've already put this into the trading view tools on the circle. So it's called Initial Balance Wave Map by Trader Drysdale, right here. There are a bunch of them. I happen to like his. Okay. Initial Balance Wave Map by Trader Drysdale. Okay. And again, you can find this in the Trading View section tools on the circle. Okay. And what it's going to do, it's going to plot in any color you want. I keep it yellow, the first hour of trading. Okay. And then what it's going to do, it's going to mark the high and the low of that first hour, the high in green, the low in red. Okay. Now, for those of you who use NinjaTrader, there is a add-on tool from the Ninja ecosystem or algorithm, whatever they call it. It's called Initial Balance and Opening Price. Opening range. Okay. Has anybody here experimented with initial balance since we've been talking it who uses NinjaTrader that can verify that? It's called the initial balance and opening range. Again, my typing stinks. Does anybody experiment with any of this? I know we've been talking about it a little bit, but I don't know if any of you have been experimenting with it. No. Okay. So on NinjaTrader, it'll be called the initial balance and opening range. Got it. You do have it, Perry. Okay. So Perry has it. Perfect. Perfect. And you can verify that's what it's called, the initial balance and opening range? Okay. We'll
Actually,
confirm it.
I'm
Okay.
I'm looking now, but I think I use a different one. I was gonna look and see what it was. I gotta bring my chart up real fast.
Okay.
But
It
I
doesn't
like it.
really
It works
matter
I like the
which
way it
one you
works.
use as long as it has the functionality. It's not a tough script. It's a high and low and a marking of the first hour of trading.
Yeah, that's all mine does.
Yeah.
High, it shows the high and the low and the mid, makes a little line.
Okay.
I'll tell you when I
Okay.
find what it is.
Anybody who used Ninja, oh, here, Arjan, I use this one, Gemify Initial Balance Indicator. Okay. Gotcha. All right. So if anybody's having any issue, actually, if anybody has an indicator that they use for Ninja, can you private message me those links in Circle so I have them, Arjan, please? That would be great. Just message me so I have them in text. I'd appreciate it. Right in the Circle.
Sorry, Dave, what you said we can find this indicator?
Well, on NinjaTrader, it's in the how did he find it on NinjaTrader? You got to go to the NinjaTrader that ecosystem. Yeah, the ecosystem. And a lot of these are free, correct? Are these free indicators? Yes, they're free indicators, most of them. Yeah. You get them off the NinjaTrader ecosystem. That's similar to like TradingView when you go to indicators. This is kind of their ecosystem, community, this is their ecosystem. NinjaTrader has a separate ecosystem. Okay. If you have any problem finding it, just post a message on the board and either I'll get somebody to help you or somebody will help you. Okay. Yeah, just Google it. It's pretty easy. All right. So basically what you wanted to do is you wanted to mark out the first hour of trading. And this indicator will also mark out the high and the low in green and red. Okay. And it will also mark the midpoint of the initial range. Okay. And as you can see, they kind of act like little boxes. All right. So I don't trade anything different whether I have initial balance or not. It's not a trading strategy. Okay. There's no settings. You just have to set the time. And actually, it's weird because you have to set it to 8:30 to 9:30 if you're in Eastern time because it's set for some reason it's set to Chicago time on the equity indices. So just make sure that it's the first hour of trading, whatever time zone that you're in. I'm on the Eastern time zone. I have to set it to 8:30 to 9:30, even though on my chart it's 9:30 to 10:30. Don't ask me why. I think the clock or the setting is in Chicago time. Yeah, the mid range is like it's not the POC, but it's going to act like a POC. Because the POC, you know, every opening range is going to have a volume also, and the POC volume is going to be at a different level. Okay, but what this is going to do, it's going to mark out the highs and lows and the midpoint. There's also another feature. I really don't use it. It plots extensions, their standard deviations above and below. Let me just plot, keep going today. So if you're looking at today, their standard deviations above and below. It's basically one standard deviation and two standard deviations based on the width of the initial balance. And plus you have the 50% ones here. So you have 150 to 250 extensions. I don't really use these. They are pretty good if you're trading gold. They do come into play, but I don't really use these, so I really don't want to focus in on them. Okay. So how do I use this? Okay. I really use this as a confluence. Okay. So let's just take any day. Let's take a normal day. Okay. Here's a normal day. Not that normal. Okay. But you have a opening range, right? So you have the high of the range right here. We're going to make that green. And you have the low of the range, right? That first hour range right here. And we'll make that red. Okay. So here's how I kind of use it. I use it in two ways. I use the initial balance on the day of trading. But my more useful way that I use this is I use previous initial balances as areas of support and resistance. And I'm going to I'll show you how that works. Let's start with current day. Okay. So current day, we have after the first, and again, by 10:30, we've already probably manipulated already, right? Most of the time we've manipulated already. We've made some type of move. Okay. We've probably been in a trade already, gotten out. Maybe we haven't. We're not sure. Maybe we're still in a trade. Okay. But the initial balance does not matter until 10:30. Because it doesn't form until the first hour is done. So don't worry about it. But once 10:30 comes, what it's going to do is going to give you a little guidance to trade to finish out the morning from 10:30 to 11:30 or 12 or whenever you're finishing trading. Usually that 10:30 to 11 or 10:30 to 11:15, 11:30 area. Okay. It's going to give you more guidance. That's what it's for. It's not a trading tool. It gives you guidance. Now, how does it give you guidance? Okay. Now, after we create the opening range, there's only three things that can happen, right? Three things. Number one, it's going to break one side of initial balance, just one side and not the other, meaning that it's going to break whatever side it breaks. If it breaks the high or the low, okay, that means the other side is usually the high or low of the day. So, for instance, if we break this above and we only break one side, means this low is not going to be revisited today. Right? That's the first thing that can happen. Okay. The second thing that can happen is it can break both sides, meaning it breaks one side. Let's see here. It breaks one side and then cuts across and breaks the other side. Let me make this a little bigger. There we go. All right. So one, it could break one side, which it did here. And in this case, it broke both. That's the two things it can do. Okay. The third thing it can do is it can break nothing. Now, when I say break, I mean during the trading day up till when the futures close at 5 o'clock. Once 5 o'clock is done, that initial balance is now yesterday's. If we break it in London, that's not. I'm talking about breaking one side of the IB, breaking both sides, or breaking nothing during the New York trading day from 10:30 to when the futures close at 4:45, and then obviously they reopen at 6. Okay. Now, these are the three things that it can do. So that gives us a little information. Okay. Now we need to understand what are the probabilities of each of these things happening. Okay. So what if I told you, okay, that in the opening range, we're gonna break one side. Now, the numbers I'm going to give you are kind of approximations. I've kind of seen a little variety. They're very close, but I'll kind of give you an idea. All right. We're going to break at least one side of the initial balance, okay, 90 to 95% of the time. So let's go on the lower end of 90%. Let's even be ultra conservative and say 85%, which is a low number. It's a low number. It's definitely higher than 85%. Okay. If we are in the initial range and 10:30 has come, okay, and we have still not broken any of the initial bottoms. Obviously at 10:30 we haven't broken anything. Okay. But if I told you that after 10:30 there's an 85 to 90% chance that at least one of these areas will be broken, would that information be useful to you? Think
Yeah.
about it. Think about what I just said. If there's an 85 to 90% chance that after 10:30 that we're going to break at least one of these highs or lows, would that information be useful for you? And how would you use it? Yeah. Right? Because what does that give you? First of all, it tells me that we're going to go from one side to the other. Now, this isn't drawn in, but don't forget, let me draw it in. Every initial balance is going to have a center point. Okay. So, and this was kind of a weird day because usually when we're right here, we punch through the bottom, and we didn't. There must have been an SMT there. Okay. But now if we break to one side, we can say, hey, you know, there's a good chance one of them, and if I can get a signal or a pattern that indicates that price wants to gravitate to one of those areas, I now have a target. Okay. How would you be thinking right here when we failed to break the initial balance low and now we're trading above the midpoint? Because the midpoint is the point of control. Below is bearish, above is bullish. And I get this move right in here. And let's say we get a manipulation or an inverse fair value gap right here. Okay. How high probability do you think that trade will be to the initial balance high? Wouldn't that information be really valuable to you? Okay. So that's one of the ways it can go. Okay. Now, here's the crazy part. The odds of it breaking both sides is only 15%, obviously. Okay, so that means that when we break one of the highs or lows for the day, there's an 85% chance that price will not revisit the other side that day. Would that information be useful to you? Okay. And then obviously breaking and doing nothing is, I think, 92 to 95% of the time. We don't break either side. Yeah, no, this is a very hot, no, I'm sorry. This should be 5 to 7%. Only about 5 to 7% of the time do we not break either side. So after 1030, when we're inside the initial balance, okay, now I can say to myself, I may already have a bias already. Okay, whoever had, Roger, your mic's on. I hear background noise. Okay, so what do I mean by that? If I had a bias already coming in, like for instance, today, the initial balance is right here. We had that big trend line right here. So we had an area that we can really tank into and all these levels here. Okay. We have the initial balance midpoint. So after price, oh, this is the 4 minute. What's the 3 minute? Yeah. Okay. So we inverse this 3 minute fair value gap right here. And the initial balance is about to end in this candle right here, the candle after. Okay. Why is that important? Because after 1030, whatever zone you're in, if you're in the bottom zone, your probability to trade to the initial balance is going to be the low. And if you're in the upper zone, the higher probability is that you're going to break the top. Yeah, today, Jorge, and I'm showing you exactly. So at the close of 1024, with 5 minutes to go, I get an inverse fair value gap on a 3 minute after taking some resistance. Okay, now I'm still 6 minutes away from the initial balance closing. Okay, and I want to make sure that we don't close above the midpoint because the midpoint's my guide. If I'm below the midpoint, I'm bearish, which is good because I got a lot of liquidity lower. Plus this trend line, I got a lot of liquidity lower. So I'm happy about that. But right after this bar closes, okay, right here, the initial balance is over. The 3 minute is still intact. Okay, I actually got 8-point better entry because I got it on this candle and then we tanked right through the initial balance. And when you have other liquidity areas below that initial balance, like that and like that, okay, and yesterday's London lows, right? When you have that, now you have all these targets of liquidity. Okay, so that's how I used today, or an example of how I would use when the initial balance is over, and now I have to decide which side of that initial balance is going to be broken. What is the probability? And the reason why I'm thinking that way is because 85 to 90% of the time, we're going to break at least one side. So at 1030, it's only natural to start thinking about that, right? Especially if you're in a trade, especially if you think that, oh, I missed the trade, but can I still get in here? Is this still a valid trade? If you haven't gotten to your target, any trade idea is valid in that direction. Okay. So again, let's go. Where's my chart? So breaking one side of the initial balance is going to happen at least 85% of the time. So at 10:30, I am looking for a reason for one of those sides to be broken. Now, if 10:30 comes and a little after 10:30, whether we're on the top side or the bottom side of the midpoint, is going to be the higher probability area direction where we can go. Now, it all depends also where your liquidity is. And don't forget, the initial balance, you're going to have all the liquidity, right? I mean, you've got liquidity right here, you know. You've got trend line liquidity here. You know, you got to think about those things also. If you're drawing to these areas already, and it's 10:30 and you're on the top side of the initial balance, you know, and you get an inverse fair value gap or a reason to go long, then there's your trade idea. So that's how we get out of the initial balance. Okay. Now, if it's going to break nothing, this means you're going to be in a very choppy day. So after 10:30, what one or two things are going to happen. Your trade's not going to hit its target, or it's just going to miss. Or the rest of the day is just going to be very choppy and you're pretty much done the rest of the day. That's it. Because price really needs to break outside of the initial balance, or you have to have a trade towards the initial balance for you to even think about doing anything. Because once it gets out of the initial balance, okay, one of two things are going to happen. Actually, one of three things. It's going to keep going and have a trend day. It's going to just manipulate one side and then reverse. Or it's just going to consolidate. Okay. But here's the deal. If we break one side, let's see. Okay. So here's an example right here. We break the bottom, right? Okay. But here's also something to consider. This is what I mean by targets. You have a fair value gap right here. We're trading into a bearish fair value gap right here. It's 10:30. It's actually after 10:30, right? We are way below the midpoint of this initial balance. If I'm sitting here and I say to myself, 85% of the time we're hitting one end, don't you think I can formulate or look for a trade from here, especially if I have SMT with ES to target that initial balance low? And that's the way I start thinking at 10:30. If I'm in a trade, then I'm obviously targeting that initial balance low or high for exit or taking profit. Okay. Now, the midpoint is very important. So now we went through the three things. So basically, when it's breaking and doing nothing, it's a choppy day. When it's breaking both sides, the very rare time, it's rare that it happens, okay? But there are ways to play it. But breaking one side of it, you're going to use two ways. The first way I just showed you, we're going to draw towards it. Now, once it breaks it, okay, then we need to kind of figure out what to do. Okay. So once it breaks it, okay, typically if it breaks one side, the midpoint of the initial balance, okay, is typically going to be a major resistance area. So let me say that again. If we break one side of the initial balance, remember, if we break one side, chances of us going to the highs of the other side are very low. So resistance is going to be at the IB low and the midpoint of the day. So a lot of times we'll see price break out, okay, return to value back to the midpoint, and then sell off and then come back in a little bit. The midpoint is everything. Okay, so on days where, and here, like here's an example. You know, you have the initial balance. We're right here. And you can go back test this. We're above the midpoint. Okay, where do we trade? We trade at least the initial balance high. Okay, that's 45, 50 points. It's all on there, Hader. It's just when you go back past 5, they don't print it anymore. See, they're all print. Oh, because I turned it off. There you go. I turned it off. That's why. So here are the midpoints. So on a day when it breaks both, okay, like yesterday, we broke both sides, right? Yesterday was a crazy day. But after we broke the bottom, look how the midpoint acted as resistance. Once we broke the midpoint overnight, okay, think about it. You get an inverse fair value gap right here above the midpoint of the initial balance still, right? You know you're getting a good trade. Okay. So very rare does it do this. So typically what you'll do is, this is today. Let me get okay. This will be kind of a typical day. You know, you'll draw towards one of them. A lot of times, once it gets to the highs, it'll pull back into the level. It's inducing sellers. Okay. But here's where I love this strategy. If I have a bias of whatever, let's say I've got levels all up here. I'm bullish, right? I got all these levels. Doesn't matter what they are. Okay. Once it breaks one side, okay, I know there's a high probability it's not going to the lows, and there's a very high probability that the midpoint's going to act as support, which means that once we break the highs, somewhere in this range, I can look to go long. Okay? And that's exactly what happened. We get an inverse fair value gap trade right here. We take out liquidity, and we continue higher and take out those levels. This is my favorite trade. If we break out of the initial balance high in the direction where you believe price is drawing to, let price break out, let it pull back. Okay, sometimes it's going to pull back to the midpoint. It's going to pull back anywhere from, you know, technically you can draw a this into quarters. You ever do this? Draw this into quarters. Okay. So obviously the half is the quarter because you're only doing the half mark. Okay. Well, actually, to make it easier, let me pull this down. Okay. So typically when price breaks out one side, you're going to get this from the halfway mark to the quarter mark. The 3/4 mark is going to be your area to look for a very high probability trade to continue higher. This is one of my favorite after 10:30 trades. This is my go-to. Because remember, we break out to one side, and if it's in the direction that we want to go, we're going to look for a pullback into the 3/4 to halfway point, and then we're going to look for our inverse fair value gap model and continuation higher.
We still consider SMT and the other stuff, right?
Yeah, you're trading completely normal. Completely normal. Okay. Now, the great thing about our model is that our entry model is so high probability and so unsubjective that it tells us when to get into a trade, and it also tells us when to stay out of a trade. which is really, really important. Okay. Now, a lot of times price will break out of the range. Okay. And this is another thread. What if price breaks out of the range and hits liquidity? Like here. What happens? We pull back in. But as you can see, price did not go below this midpoint until later on in the day. And then what did it do? It came back in here to the low overnight, and then it rallied back into the range again. Okay. So just use this as kind of a confluence. Okay. Like today, this has to be very bullish, right? We've taken out the low. We're consolidating above the midpoint here. We should take out this high. No doubt. Right? We should take out that high. So this is going to be one of the rare days that we go both. But the reason why this is a weird day is because today's opening initial balance is all inside yesterday's initial balance, which both of them are inside Friday's initial balance. Okay. When you're inside an initial balance of the day before, you got to wait for one of those sides to break. So in this case, this initial balance, these lows right here had to break. We had to get out of this range. We had to manipulate this initial balance. We're inside yesterday's initial balance, which was still inside Friday's. Price is going to be choppy. No, Pavel, because currencies don't have an exchange opening. So there's no first hour of trading that there's going to be so much higher volume than everything else. You know, you can maybe use it the first hour of each. It just doesn't work for currencies. Yeah. Yeah. So on the screen, I have the three that it works for. So you're talking about equity indices. You're talking about gold and crude oil, because those are exchange products. Yeah. So I love using yesterday. So to me, this Friday, okay, we still have not taken out the range. Now, even though during the same day we won't take out both, once the day's over, those untapped initial balance highs or lows are still draws on liquidity. Okay, so they're valid until they get mitigated, Graham. See this low right here, this initial balance low on Friday, we broke it, but we still have the initial balance high on Friday. This is a draw on liquidity. See, we look like we're manipulating here, right? Accumulation, manipulation, distribution. You know, we're probably going to do something like that. Right? Makes sense. Would anybody be surprised? Okay. So the way to use current day to me is just a confluence. We need to break one side. We trade towards it. Once we get to one side or the other, how price reacts is going to tell us what's happening the rest of the day. If we're trending, price will stay outside of that initial balance, and you'll get fair value gaps and displacement below, and it'll trend. That's when a trend day happens. Okay, and when we break low, the initial balance low becomes major resistance on trend days. So if we come in and displace below, and then the initial balance low is holding, chances are we're going to be, and then we displace out of that, chances are we're going to be a trend day, lower or higher. If we break below the initial balance, but we can't displace lower, okay, then we're going to start moving back into the initial balance area. And in that case, the major resistance becomes the midpoint. Now, don't worry about memorizing all of this, because I'm going to start incorporating this more into the reviews and previews and the trades and our trade examples. So we're going to be using and seeing this terminology every day. This is just an intro video towards it, and which you can watch a few times. But we're going to apply this. So don't think you have to memorize this. Okay? Now, this isn't even my favorite way to use the initial balance, believe it or not. So I'm going to remove all drawings. Okay? My favorite way to use initial balance is to use past initial balances. Not even today's initial balance. Because after 10:30, chances are I'm already in the trade I want to be. You know that. We all are. But after 10:30, it's giving me a guidance to see what's going on from bed 10:30 to 11:30. That's all. It's not giving me major areas to trade that I really want to trade off of. It's just giving me guidance. Okay? But the past imbalances to me are the best. Okay, so let's go to a 15-minute chart. Okay. So I'm just going to draw that's a red line and green line. Okay, and a midline I need. Okay. So here's an initial balance. Okay. The next day we open up and the initial balance of yesterday was broken on both sides already. So they're not targets. So now the lows here and the highs here are the targets. You have a fair value gap here, obviously. You deliver out of a fair value gap. Okay. You break above here. Okay. Now, again, we're not worried about today's action. We're worried about yesterday. So this is the one we're worried about. So there's nothing really major to use here because we're opening up inside. These don't really matter until we get outside. So now we get outside of this. Now we're talking about this fair value, this initial balance right here. So we're going to mark the highs, the lows, and the midpoint. Okay, so as you can see, when we break above, there's really going to be a few areas of interest. But I don't even like to buy here. Like price can come back and the initial balance high can be support. I never do this unless I need a really good signal to do this. But this isn't one of my favorite trades. Okay, I like it when price comes back in. Because what happens is, okay, and this was probably something news or something related, I'm not sure. But as you can see, price came in and this midpoint right here, obviously we didn't close below the midpoint. It held as support. Okay, and that support, okay, now acted as a move to go higher. Okay, now that's this one. Now we move up to this one. How is this one going to help us? Remember, we're already a few days ahead here. Okay, we're looking at past initial balances. So right now we're over here. Okay, and we break this initial balance. Okay, and now, okay, what's untapped? This initial balance up here is untapped. So this is a draw on liquidity. Okay, so once price comes into this value area here, and it's perfect because it's right in New York time, and you got a manipulation right here, right there. Now we can target those highs. And as you can see, the midpoint acted as initial resistance. And I say initial resistance, that's a 50-point pullback off the midpoint. Once it crossed, but the draw on liquidity is still higher. So any dips off the midpoint could still be bought. All right. So here's a perfect 15-minute fair value gap that you could have used a 1-minute inverse fair value gap to trade higher, our buy model. Plain and simple. Because we know that this is targeted. Okay. So now we break out of it. Okay. So now this is important. And this is important. this fair value gap. Okay. Now, the other important part of this fair value gap is still the midpoint. Okay, because we broke through it, but now if you notice, the midpoint of this imbalance initial balance equals the high of this initial balance, which acted as great support. I'm always a big fan when price comes back into previous midpoints, which it did right here. So this one comes into this midpoint and this high one at the same time. It's a confluence. Okay, so we're going to leave that here, and we still have this midpoint. Okay, so now we're over here trading. We break below. Okay, we trade above and trade above. So now we're going to use, we still need this one. We still need this one. So let me put this one up too. So this is going to be red. Why isn't this working? There we go. This is red. Oops. And this is green. Okay, so now we're here. We break above. Okay, and we have a midpoint here also. Okay, as you can see, I mean, this was probably some news or something that came out. We destroyed, came back down here, but we had this midpoint right here got tested, right? This was support. So if we're coming into this day, okay, we have liquidity here and we have a midpoint here, and we also have a initial balance low that we have not mitigated yet. Okay, but I love price coming into these midpoints. When price comes into these midpoints, and remember, these are points of interest. It could be anywhere. Okay, these are good areas to trade off of. Okay, so that's gone. So now this becomes an area of interest. And this midpoint, this is not anything anymore. Let me pull this down. Okay, so now we come out here, we break here, we come into this more. Now we're rallying. Now we have these highs up here as liquidity. Okay, and as you can see, once we got up to these areas, created equal highs. Here, like if you saw this, equal highs up here. You have equal highs up here, right? Relative equal highs. You have right here, right there, relative equal highs. Price comes back down, and you get an inverse fair value gap right after you hold the midpoint of this area right here, okay? And you also have confluence because you have the top of this imbalance right here. Inverse out of it, target this area right here, okay? After we break out, price then returns back, comes back to the top of this one, the middle of this one. Okay, these are just confluence areas. Okay, look how price came into this area right here. See this initial balance? This big move down. Look where it found support, the mid of this initial balance. So these areas of previous initial balance act as little boxes. Okay, obviously, if we cross the midline and start accumulating below, we're probably going to attack lower liquidity. Acts kind of like a fair value gap with a consummate encroachment. Okay, so these really didn't do anything. Okay, here you have the bottom of one, the top of one. We come back in, support at the top, rally back higher. Okay, we have one right up here that needed to be mitigated, draw on liquidity. Let me move that lower. Okay, here's one that didn't get retouched right here. Right here. Maybe it gets retouched later. Let's see. Yeah, see? Always going to draw towards it, right? So if you're trading lower here, you know you've got draws on liquidity to these initial balance, especially these lows. Look how price breaks the initial balance here, finds support at the midpoint before heading higher. This is one of my favorite setups, even intraday on anything. Could be a 1 minute. This is my favorite setup. It breaks the initial balance high. It could come, it hangs out a little bit, maybe comes back in, doesn't really displace, finds support at the midpoint, and the midpoint is the move higher. Okay, here's another initial balance. Where is resistance? Right at the midpoint. After we break below the next day. Okay. If I'm coming into this day right here, and I see this, right? I see liquidity right there. I see manipulation lower. Okay, and I say, oh, this would be a good place to manipulate to, right? Boom. Right at the 50% mark. You know, sometimes you'll have a situation where we'll break the lower one and then we'll travel higher, but we don't break the top. And we just kind of use these as boxes. You know, here we break the low, but we can't displace. If you get a good 1 minute inverse here, you take it higher. Same here, right? What's your target? The midpoint. Anytime that you buy or sell, that you're doing a reversal trade above and below these areas, your target's always the midpoint. The quarter point, but really the midpoint. Look how the midpoint provided resistance, and then it traveled back out. Is it any coincidence that this high right here was a retest of this initial balance low? Any coincidence? No. After we break this initial balance high, is it any coincidence that we have support at the midpoint, which launches higher? Any coincidence that we broke higher here, came back in, found support at the midpoint, previous midpoint, before launching higher, taking this liquidity, right? This is a point of interest. You know, we trade this. You know, we trade, you know, think about this. This is accumulation, manipulation, and a distribution move. Right? This is what we play all the time. The difference is here is that not only do you see the manipulation, but you have a point of interest to manipulate into. A fair value gap, a midpoint of a imbalance, a point of control. Yeah, I'm going to do a lot of it, Andrew. I like I said, I'm putting this all together, and you guys are going to have to rewatch this a few times, but I'm going to start implementing this. You'll learn by watching me implement. You know, this is just to give you an idea. You're really going to get a hang of this as I implement it, and that's going to take a little time. This is meant to just be not a course, but an intro that you can go over, okay, and just kind of watch a few times. Okay, so again, my favorite way to use initial balance is to use previous initial balances. These are times where here's a perfect example. When the break of an initial balance takes out key liquidity into a fair value gap, right? You would be looking, without the initial balance, we would be looking to short that anyway, right? That's in our model, right? We short into a 15-minute fair value gap. We wait for liquidity to be taken out. Hopefully, let's assume we have SMT with ES. This is the way we trade. Okay, but now we have extra confluence because we just broke above an initial balance, manipulated into an area of interest, and now that price discovery to the upside is failing, giving us an inverse fair value gap, which means that the initial balance high is being manipulated. And once we get below and close below the midpoint, you're home free to the low end. I don't think you can erase them, Andrew. I don't think you can. I don't think you can. Yeah. I always leave them. There's no harm in leaving them. Past ones are the way this tool goes, it stops drawing the lines after a while, and it just shows the yellow boxes like this when it goes way back. And the lines only go for that day. They don't keep going. So the lines are not going to be drawn into the next day. So I'll manually draw those. Now it's always first test, Roberto. Once an area is tested, everybody can see it. So it's not an edge anymore. And these areas are all draws on liquidity, Here, and in a situation like this, here we have on a Thursday, the initial bounce. We break above, and now we come to the midpoint in London. We have a little bit of a bounce, but all of a sudden, what happens? We start to accumulate below it, and then we manipulate, and then an inverse fair value gap to the downside. Okay? I know you're shorting right here, but you're going to here, and you have all these other liquidity levels below. So when you have other liquidity levels below, and where the draw is, these are good trades to take. And I bet you, this is a 15-minute chart. I bet you if you go down to a 5-minute, this would have been a really good setup. Actually, we can probably check that out. There you go. Right? Look at that entry. Let's see, maybe a 7-minute would have been better. Yeah. 7-minute was the best. Entry right there. Targeting right those lows, perfect. So that's how we use these midpoints and centers. So if price comes down here, it's going to do just like a fair value gap. If price is coming down here, once it gets to the midpoint, it's going to do one of two things. It's going to support it, and if it starts supporting it, we're going to attack these highs. If it breaks and establishes below and does something like this, then we're going to target the lows. Same thing as a fair value gap, same thing as a point of control. Well, it's a confluence tool. So it's a confirmation, it's a confluence. I don't base my trades only on it. It's a confluence. That's it.
Oh, David, but my question is, in case that it takes the break-even point in our regular entry model, for instance, in that example that you were showing before, it took the break-even point, but it still went for the low, for the initial balance.
I mean, you've got to have, if you've got conviction of where price is going, that's your break-even point.
Oh, okay.
Yeah,
Okay.
that's your break-even point. And don't forget, it also depends on the time frame you're looking at. It's got to, if we're looking at the 15-minute time frame, it's got to be a reasonable pivot. And listen, you need to let some trades breathe. The reason why people put all these restrictions on their trades, like they'll get into a trade and they'll only go to 2 to 1, or they're too mechanical because they're pattern traders. And what do I mean by that? Pattern traders trade patterns. They don't really have an exit strategy because they don't know where price is going, because they don't understand what we understand, draws on liquidity. They don't understand price action. They only understand patterns. So it's like trading with our inverse fair value gap entry model, but that's it, without any context. Can you make money doing that? Yeah, you're going to do a lot of trades. Okay, but you'll make money, but your win percentage won't be anywhere as high. Okay, but when you know where that draw on liquidity is, hold it. Because that's part of trading, knowing where price is going. You know, you have a an imbalance here. What happens when price breaks out? Where is support? Right at the midpoint. That midpoint, so when you're in a trend, these are great areas. Where does price get support here? Right at the top. Could be the top, it could be the middle. Okay, or it can be when it's coming in, it's going to be anywhere from those areas. Right here. From the top to the midpoint. That's going to be your zone that you want to look for a long. Okay, and as you can see, price bounced off. It wasn't pretty delivery, not much higher, but as you can see, it delivered higher to the midpoint. Once price breaks one side of the edge and it doesn't continue to trend lower, you're probably going to have a choppy, maybe slightly rebounding afternoon at best. Not like Elliott wave patterns at all, Praveen. I don't. Elliott wave I mean, to me, that's one of the most subjective things I've ever seen. I wouldn't even compare it to Elliott waves. I couldn't compare it to Elliott waves, so I couldn't even agree with you, even if it was correct. Yeah. Yeah. I don't know, Hader. We'll work on it. You probably have to go to your settings. So the settings in TradingView that I have are this. These are the settings. You have to plot the 50% mid levels. You got to tint the high-low window. That's all I have. If you want to see the extensions, you can plot the extensions. Do they work? They're subjective. They're standard deviations. They're not real levels. They're not real levels. If I'm at all-time highs, I would use them. So this is pretty simple thing. Pretty simple. There's nothing really to really fix. This is the only thing I have. You're marking out the first hour and a half and you want to see the midpoints. Okay? And then, you want to see, like on days like today and yesterday, you want to see, where's the liquidity? And you notice here today, yesterday's whole day and initial balance was inside Friday's. Today was inside yesterday. Something had to break. So we at least took out all this liquidity before we bounced. And now hopefully we'll probably take out this liquidity above here, all this liquidity. We have this initial bounce high that we need to mitigate.
Can you show it again so I can take a pic?
Yeah, Carl, it's called the initial balance and opening range. Try that, initial balance and opening range. If you still have trouble, just post a message in the circle group, and one of the NinjaTrader users, I'm sure, will reach out and help you. And if they don't, I'll find a way to help you with it.
Thanks.
Okay, you got it. Okay, so we also want to see where today's initial balance ranks and positions itself with other initial balances. Here, where's support? Isn't it amazing how price came down and got supported, by this initial balance before heading higher? Technically we are staying above the midpoint of Friday, right? How can you not be bullish? We manipulated below the midpoint and these levels. How can you not be bullish now, right? From what we just spoke about and from the examples that we've shown, how do we not think that we're taking out these highs right here? Here, here, and here. Plus these initial balances that are left over. Okay. So this was a lot. Okay. I wanted to throw everything at you today in the webinar because that way you can rewatch it. Now during meetings, preview reviews, Q&As, future accelerator meetings, as we go over trades, okay, this is all going to be a part of it. But just keep in mind, this is a confluence. On current day, it's to give you guidance between 10:30 and 11:30. It's useless up to 10:30. But we're always using and seeing in the positioning of previous day's levels that will act as support and resistance below manipulation areas. So if we can manipulate like this manipulation into a previous initial balance area, especially that top half, those are going to be very high probability areas to take action. Yeah. Targets and entries, just like anything else. And look at what we're about to do now. We just took the initial balance of this morning, the other side. We just took it. Actually, no, we took it. Did we take it earlier? No, we did take it a little earlier. We already took it. But once you got to here, that's in a 5 minute. You know, once you got to here, no, we didn't take it. Oh, that's why. I was on an hourly chart. You can't do it on a chart. Yeah, we just took the initial balance high right there. That was the initial balance high. So what did we just talk about when we first got on about this being a good long into the initial balance high? Right? It's a target. There's your target, Gilberto. There's the answer to your question. We know that the initial balance high is a target. We are consolidating above. And how many times do we see us stop short of our target? Come back lower. This is a gift. This is a gift. Let's see how this was on the oh, look what we did. Wait a minute. No, we didn't leave equal lows. It made us believe we did. But we did not have SMT. No SMT. Okay, but a clear draw on liquidity, right? I definitely would have not have taken this setup. Oh, wait a minute, we did have SMT. Did we? No, we didn't have SMT. No. Yeah. No, I even though I know that this was the target, I would have wanted us to break this with SMT before I got in. Yeah. The delivery was fine. It's just that we didn't manipulate. We didn't take liquidity and we had no SMT. Neither one of them did. So that's one thing of our rule that's a requirement. So we stay out of the trade. And it sucks because it worked out. Okay. But maybe, no, this wasn't SMT either. Actually, it was. There you go. We're using a fair value gap at the tag of this fair value gap here.
Mm,
See that?
yeah.
that candle right there. And then you got a little inverse right here up higher. Listen, if you know what your target is, find an SMT. It doesn't have to be perfect. Just make sure it's legitimate, you know, but you know, just look for it. If it's not obvious, listen, it's nice if it's obvious. It would have been really nice if this took this low or this took this low to give us an SMT, but it didn't. But this kind of did. Okay, so there's your initial balance high for the day. That's your target. And considering it's 3:30, you'd be kind of hard pressed to continue on. But you know what, Gilberto? You don't need great delivery when you know where price is going. You just need confidence. If you're confident where price is going because you have a roadmap like this to deal with, think about it. You have, I didn't mean to do that. I'm going to shut this down then. Close that there. If you have a roadmap, okay, and then with that roadmap, you have well, whatever you want to call our execution time frame, that your call to action, you know, plan. All right, so that means you have your points of interest, you have your roadmap, you know where price is going, you know where it's delivering from, okay, and then our entry model is going to be our call to action when we see it. And we have to see it. And most of the time when we don't see it, it saves us from trades. Even if it's coming into areas we think that might hold, we still need to see what we need to see. And that's our entry model. We got to deliver from a higher time frame fair value gap. We got to deliver from a fair value gap in the current time frame. We have to have SMT. We have to take internal liquidity. We have to have a displacement fair value gap. We have to inverse that fair value gap with momentum, and we have to have clear targets. That's it. Okay, and what else can you ask more for from a trading strategy to have clear levels, a clear plan, a clear understanding how price action works, so you can understand where price is going. And once you understand where price is going, there are certain characteristics of price action, our entry model, okay, that we look for to confirm in the direction of where we think price is going to go. And that's it. And it's a probability game. And if you do it right, you got a very high probability of making a lot of money and pretty quickly. The good thing about what we do here, if you're not even that good at it, even if you're 50-50, you still should have way more than a 1-to-1 risk to reward on average. You still should be making money. And then you can keep increasing. I did. Well, I'm not going to go over the trades I took on the ES today. I'm gonna do that on the review video, Joe. So I'll put that out in an hour or so. Yeah, Pavel, go ahead.
Hi, David. Thanks
Yeah.
for this.
And hold on, Joe. I don't mean to push you off. I just when we do the concepts and lectures, I want to make sure that the any questions refer to the topic. So the trades I took today or should have taken will be in the review video. Yeah, and so I'll put that out in about an hour or two. Yeah. And then if you have any questions from there, just post it or come to Q&A tomorrow. We can go over it. Sorry, Pavel, go ahead, man.
Okay. You spoke about the confidence. Is it possible that my confidence is decreasing by the time spent in the trade? Do you have any
Can you your mic is still low. I mean, I know we had this problem yesterday.
Okay, sorry. Do you have like specific time limit to spend in trade? Because my confidence, when you talk about the confidence, is decreasing by the time I spend in the trade.
Well, afternoon trading is going to deliver slower. Anything outside the 9:30 to 11 a.m. Eastern time window is going to deliver slower than that time. So if you're trading like this position right here, technically this was a 5-minute model. Okay. And actually, Joe, you get to incorporate a look here of a trade. So this was the inverse fair value gap on the 5-minute today with the target of this initial balance. So the problem is this trade happened a little bit before noon. So this delivery here was, and then
That's
you get up to
exactly what
and then you
I
get up to here, and then it pulls back, and you're like, oh my God, we all go through that, and then you wind up
Exactly.
selling here because you start panicking, okay? But it's still going to hit the target, so you have to be patient. Now, this morning from 9:30 to 11, you have this action, you know. It's gonna deliver faster. So you can trade both, and as you can see, there was a really good move this morning and a really good move this afternoon. They both hit the targets. They both hit areas they're supposed to hit, but the afternoon took a lot longer. The afternoon took 11:50. What time is it? 11:50. Took 3.5 hours to get from here to here. Okay, but to get from here to here took about 20 minutes. And from
Yeah,
here to
this is
here took about 15 minutes. So it's the time of day that's going to determine the speed. But the biggest thing is you need to have confidence in where price is going, and you got to understand they're going to try and shake you out. Nothing's going up in a straight line. If you want things that are going up in a straight line, trade from 9:30 to 11. That's why we do it. Because that way we're in here short. We're in here long. Okay? When you're in here long and you know price is going to here, but you got to sit through all of that. If you can stomach it and feel confident, go ahead. That will come with screen time. I know it's hard in the beginning. I know. So my suggestion is don't trade after 11:30 or 12 noon, because those are the type of trades that are going to happen. They're going to be slow moving. Okay. And if you want to trade the afternoon and get used to that, trade very, very light and test it out. That way you can stomach it a little better. Okay, Michael, that's fair. I don't know if there was well, we had SMT because we had, where was it? Where was the SMT? We have one on the bottom. We took out London. Did we take out those? Okay, so this was kind of a weird SMT. So this level right here was a key level for NASDAQ. Okay, we did not take this level out today. But on the S&P, that same level is right here. That got taken out. Okay, so when we didn't take out this last level here and started kind of moving off, that's when I looked for the SMT. I didn't have this marked out. I didn't see it at first. I had to look closer for it. So basically what I did is I went to this level. I go, why didn't we break this level? Then I went to the same level on the ES, which is right here. And I see, where are we on the ES compared to that level? And we've broken it a couple of times. Okay, so that tells me that we don't necessarily have to break this level. But there was no SMT like at the current price. So that I can understand. And this SMT that I showed you is something that you have to look for. But the reason why I look for it, and I'm telling you this, if you get to a point like this, where a level where you expect this to be broken and it doesn't break it, don't just say, okay, it didn't break it or it's going to break it. Find out why. And the only acceptable reason there can be for it not to be broken is for the ES to have broken that same level and formed an SMT. That's the only logical or acceptable answer for us to accept that we're not going to hit that low. But we need to know why. And that's how you find out why. Just go to the exact level that you wanted to see broken on NQ, find the same spot on ES, and see why did we not break that level. Now, if we went to ES and ES had not broken that level, then I would be much more concerned about going long and expecting a retest and a break of that level. Good. Okay. Bargerberto could have a session losing trades and why loses and what could have been done better. So Praveen, I kind of try and go over that in review preview, but mostly when I go over that, Praveen, is if you go through the student chart analysis, that's the best way, because the students are the ones making all or most of the losing trades, and then we can explain why. Okay, if I see something wrong on review preview, I will point it out. But you will see much more losing trades. Your students also trade more. Okay, but they'll see more losing trades. Yeah, Justin. So the initial balance for that short this morning, because you had trend line liquidity. So the initial balance definitely helped for sure. Good, Doug. The key is watch it again, and then watch it again, and then we're going to start implementing this. So you're going to learn it that way. Implementation. This is concept and theory. This is laying the groundwork. Okay. Keep in mind, when we get off this tomorrow morning, you're going to forget half this stuff. But you're all going to have the initial balances. Make sure they're on your chart. I keep mine just on the 15-minute. That's it. I don't keep them on any other charts. Just the 15-minute. Okay. And if anybody wants to see my layout, somebody asked them. Very simple. I have one layout with two charts. They're 1 minute each, ES and Q. I keep them side by side so I can see SMTs. This is my execution chart. Okay. On another screen, I have these four charts. I have a 15-minute chart right here in the middle. And then on the left, I have a 2-minute, a 3-minute, and a 5-minute. They're small because I only need to see the inverse fair value gaps. So when I'm in execution, I have a 30-second, a 1 minute, a 2-minute, a 3-minute, 5-minute, all in view, and a 15-minute. I don't miss anything. Okay. And then on a tab out of view, I keep my longer term charts up. I keep the NQ and the ES side by side. This is where I see my big picture stuff, my liquidity, my highs and lows, my fair value gaps of interest, SMTs. Yeah, Hater. It's when you have a Kraken correlation, what it means is that the one, because don't forget, when price breaks a high or a low, you're looking for it to do one of two things. It's either going to keep going, or it's going to sweep liquidity in reverse. Really, right? That's the only two things it can do when it gets to any high or low. So if one does not sweep the low and only one of them does, it's now telling you that that break of that low is a manipulation, not a displacement and a reversal. That's why. And then when you get an inverse fair value gap out of that, that's our entry model and our clue and our signal to enter the trade. Okay. Did everybody find this useful? Do you guys think this concept and tool is useful? Again, it's a confluence tool. This changes nothing about what we do as far as what we look for. It's a confluence tool. And obviously, it's only a day trading tool. It could be used as a swing trading tool if you're looking for entry. Yeah. And it's just going to give you, like I said, on the day that you have the initial balance after 10:30, it's just going to give you some guidance between 10:30 and 11:30, and possibly the rest of the day, depending on the day. But the key is using imbalances that, you know, haven't been retested yet after they break out, those are very powerful levels of interest. And if they coincide with a POC or a fair value gap, wow, then you know you really have something.
Very useful.
Yeah. John, it's a confluence thing. You know, I would put it on my screen and just check it out. It's not a trading strategy. It's a confluence. It gives you direction. You know, the high, lows, POCs, fair value gaps, that's our model. But the initial balance can just add a little confluence to your points of interest and give you a little direction about what price is doing after 10:30. That's it. And if it only keeps you out of bad trades and never gets you into a winning trade, but just keeps you out of bad trades, then it works. Okay. So I agree, John. I mean, listen, you're pretty new. So, you know, there's a lot that gets thrown at you early. Get good, build the house, build the foundation first. This is something you add after. I agree with you, right, John? I would kind of put this on the back burner. And that goes with anybody. You know, if you're just kind of starting out, put this on your screen, but just observe. Just observe. Yeah, screen time. And it's a confluence. I love the previous days imbalances. I think they're great confluence tools. Yeah. Yeah, take it slow, guys. If you know, if you're just starting out, you know, basically understand liquidity and internal and external levels. That's the most important thing. Understand our entry model. You know, get the basics down, you know, watch our review previews, you know, understand the research, you know, watch the trades, come to Q&As. That's invaluable. We do it 3 times a week. I spend 3 to 5 hours a week doing Q&As. Okay, that's one-on-one time with me and conversation with the group. Very useful. Okay. All right, so if there's no more questions, probably really helps to pair up with another person. Yeah, listen, you know, it's easier said than done, Praveen. The thing is, I'm a big fan of people kind of forming a trading buddy, but it's got to be the right trading buddy because the wrong trading buddy is counterproductive. So how do you find the right trading buddy? It's kind of tough, you know. It's not, you know, we can't create a trading dating service where you make a profile and you match profiles like a dating service. It's tough. So what I suggest you do is just start talking to people. Just reach out to people, talk to people. You know, when you guys come to Q&As, you can communicate with each other also. You hear other people. You know, you may listen to someone in Q&A and say, wow, you know, he's kind of on the same page with me. Let me message him and give him a call. You know? But I agree with that. Now, if you're going to do it, keep the group small. It should be a group of 2 or 3 at most. Do not grow a group 5, 6, 7, 8, 9, 10. You'll just have 6, 7, 8, 9, 10 opinions. And then it just becomes counterproductive. Yeah. Yeah. Just find someone you're on the same page with. And that may take a while. But just reach out. Start talking to people. You know, be communicative in the group. You know what the best way is to do it? Form a study group, like an accountability group. That you can reach out. You know, if you want to start one and if you want to be the captain of one, it's very easy. Just start it, keep a spreadsheet, invite no more than 10 people, around 10 people, and have a study group. Meet once a week. Okay, now you just met 10 people. People will drop out, new people will come in. You're always meeting people. Out of that one group of 10 people, you'll probably find a trading buddy. That's my suggestion. So anybody who wants to captain an accountability group, and I mean captain, just run it. Just get all the emails together, you know, create time, set the schedule, and open a Zoom or whatever. Set the meeting. If anybody wants to volunteer and do that, just make an announcement. You know, get 10 people in each group. If we have multiple groups, that would be great. And that way you guys can meet once a week, and just kind of go over trades, talk, you know. It's always good. It's always good to talk to people who are going through the same process you are. Yeah. I would love to set it up for you guys, but it's very tough to do so. It's a lot of work and it's not easy. So, yeah. What layouts? Oh yeah, well I have Forex pairs on other stuff. I have other layouts. Um I got a swing trading layout. I got another NQ layout. I got a currencies layout. Just so examples is exactly what it is. I got a Bitcoin layout, a gold layout, a Euro and GBP layout. So um, I don't keep them up because I'm not day trading them. I only keep my NQ stuff up and my execution. Well, you need a higher level of trading view. They get you with that stuff with the layouts. It's so stupid because all I need is layouts and the amount on the charts. I don't need anything else, as you can see. But it is what it is. All right, so I'm going to input this video into the recordings, and I'm also going to put it into the methodology section, okay, as an imbalance webinar. This is something that you should go over a few times. But like I said, we're going to start incorporating this, but don't go rushing out and making trading decisions right away. Just start looking and back testing some of the things that I told you, and just kind of keep that in mind. The biggest thing is after 10:30, kind of, try and gauge what's going to happen. Obviously paper trade and demo test first before you put any money on the line for sure. But we'll continue to go over it, and you'll get much more understanding of it. I don't really have a gold layout, LC. It's just two charts. A silver and a gold. I have the imbalance up there, which is 820 to 920, and that's really it. Now, the imbalance tool here with gold, you can use these extension levels as support and resistance also. And gold is good all day, all night. These extension levels and imbalance levels is good to trade all through London. Yeah. Gold was flying today. It looked like it manipulated. It looked like it broke higher and then it's come in. It's probably going lower because you have accumulation. And this is how you know where price is going and how far. You have manipulation. And now distribution. However much that is, right? Where could that be? Where are levels? Well, we have this untapped level right there. We got these levels down here. This is still support and resistance. It's a pivot high, So these can be all distribution levels here. Who knows, right? I don't really trade gold. I don't need to. And that's really another thing. If you're trading New York session, trade the equity indices, please. They're tradable every single day. It's your best bet for your money than anything. Okay. The problem is with gold is the most active time for gold is when the market opens. Okay. We have consolidation, initial balance, and then we manipulated it. It's a New York session product. Because
Do you think it'll hit
that's when the
5,000?
gold market opens. You know, so in the New York session, there's nothing beats the equity indices. This you can make a living trading the equity indices once, twice a day. That's all you need. It moves. It's volatile. It's predictable. Once you understand it, once you have the roadmap. Yeah, I would cater. I mean, it's funny you're dropping them, but the some of those currencies have been pretty lame the past week or two. But that's currencies. When they're not trending, they stink. You know, and when the volatile ones are in consolidation, what are you going to do? You know, you can start trading New Zealand dollar, US dollar. You'll wait 2 hours to make 12 pips. You know, it's not what you want to do. You want to trade the most volatile pairs, but when they're in consolidation, it's tough. You know, gold was terrible for months. Then all of a sudden it got good, but with no indication. No indication. So what are you going to do? That's why I stick to the NQ. I know what I'm trading, and that's all I need. I don't need to worry about anything else. Everything else I can swing trade. I don't need to day trade anything else. Too much. Way too much. Okay. All right, guys. Good session. All right, let's work on this more, of course, and we will. Tomorrow we have PPI and then CPI on Friday. And you know, look how now much we're extending higher. We see how we broke the high, the initial bounce high. We came in and now we're moving higher. These are the draws on liquidity. This has been the draw on liquidity since Friday. We just didn't hit it yesterday and overnight. But this is the draw on liquidity. Always has been. That's why this move down is a manipulation. And if this is accumulation, and this is manipulation, and this looks like it's distribution, okay, then you know we could be talking about hitting, you know, all these highs up here, right? If this is true distribution, why not? Job numbers are terrible. So that means rate cuts. Yeah. I don't think that's going to happen with PPI tomorrow and CPI on Thursday. I think you'll get plenty of opportunity. Plenty of opportunity. So, but these levels up here, who knows? In London, they could be taken out. They could be taken out by the end of the day here. You don't know. Now, why is this the draw on liquidity? Why has this always been the draw on liquidity? Because ever since we've been delivering from these 4-hour fair value gaps here, the external liquidity has always been here. It's always been the target. So if you understand the higher time frame, where it's going, internal to external, and if we haven't hit external yet, we need to hit external. That's the draw on liquidity. Which just so happens to be the initial balance high from Friday. Okay, look at that. Look at that manipulation. Technically, this is just accumulation inside Friday's thing. Accumulation doesn't always have to be sideways. It could be trending a little bit. This is accumulation. This is manipulation, distribution. Okay, meanwhile, look what we're doing here. We're sprinting towards these highs. Look at that.
Jesus, we're
We
going
do
off
that
the
at
board.
350 all the time.
Yeah.
Yeah, it's the draw on liquidity. Yeah, it's pretty
Wow.
crazy. It's pretty crazy. But do you see how when we were talking earlier when I said this is bullish right here because we haven't taken out the highs and we're above the midpoint, that this is bullish? That's why. And this fits the same result as all the examples that we did before. And it's good that we got to see it in real time. Because when you come in here and say, hey, this is bullish, okay, and we're 100 points off the low, and we're bullish, you know, you better know what your where price is going, right? Well, when you do and have a roadmap like this, it gives you the confidence. And we just took out these highs. We just took out these highs right here.
I got out at 23,865.
There you go, Roger. There you go. How much did you make there? Beers on Roger.
No.
You took
It's
that long?
chump. Yeah, I took the long earlier. Yeah.
Oh, good for you.
Chump change. You know, I'm doing MNQ, so it's not very much.
Listen, it's okay. That's okay. That's okay. Do you know why you made money?
Yeah.
Okay. Just make sure you knew
That
why
I
you made money.
I understand.
Yeah, because you want to make sure you can do it again.
Yeah.
Yeah.
Well,
Yeah.
3 times today.
Yeah.
3 times positive trades today.
Excellent, Roger. Excellent. Excellent. Good to hear. Good to hear. All right. That's a wrap. Glad we were able to see kind of some stuff in real time that doesn't always happen. But you know, we'll work on this more, but you know, watch the video again. Obviously, you don't have to go through the Q&A, so you can shorten it and you know, keep working on it. All right. That's it, guys.
Take care. Take care, David.
You're welcome. Take care, guys. Have a good night. We'll see you tomorrow.